Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Wednesday, October 23rd. A lot of red on the screen here this morning as prices are lower across the board. Wheat right now is a downside leader, about 7 and 9 lower. Corn's down 1 to 2. Soybean complex also lower. Beans 4 to 6 lower, let's call it, while both products are slightly lower as well. Speculative traders were pretty healthy buyers in both corn, beans, and to some extent wheat yesterday, while being light sellers in the meal. The money manager short position in corn, beans, and wheat just continues to drop, while open interest in corn continues to build, up another 25,000 contracts with yesterday's trade. Soybean open interest is pulling back, however, as we're starting to see liquidation of the November contract ahead of next week's first notice day. Open interest was also higher yesterday in wheat, suggesting some fresh money coming in on the long side. Outside of some scattered rains across the central Midwest, U.S. harvest is running full speed ahead as we move into the home stretch here. A good mix of rain and sunshine continues to benefit planting and early crop development across much of South America into early November. While the monsoonal rains have been a few weeks late, however, arriving into central areas of Brazil, plantings remain behind normal, so only time will tell if farmers are able to catch up without negatively impacting yield, particularly corn for their second crop, which goes in after the bean harvest early next year. The EIA will release their weekly ethanol production data later today. Last week's production is expected to have risen to 55,000 barrels a day, up slightly from the previous week, and if realized would be just above the pace needed to reach the USDA corn usage forecast. Export demand for corn outside of China remains strong, with the U.S. competitively priced in the global marketplace. Yesterday, the USDA announced another 14 million bushels of corn sold to Mexico. That brings announced sales just the first 2 days of this week to 34 million bushels. Expect another big export figure in tomorrow's weekly export sales report, following a slew of export announcements from last week. The low commodity prices and high production costs are also negatively impacting farmers in South America. Read a report this morning that the number of farm operations in Brazil to file for bankruptcy protection in the first half of this year were triple from what they were the year prior. Overnight here, D's corn did trade above last week's high, however did fail in an attempt to trade above its 100-day moving average at 418 before pulling back a bit. Near-term support is at the 50-day moving average at 408 3/4. Soybean complex also pulled back a little bit from yesterday's higher trade. Seems like much of yesterday's higher trade was being attributed to some reports suggesting that Vice President Harris has been seeing a little bit of an uptick in the polls 2 weeks ahead of the presidential election. The trade apparently viewing this as bullish, given the uncertainty of how high tariffs will be under another Trump administration. A Harris administration is also viewed as being a little bit more friendly, showing better support for biofuels, which would, of course, then benefit soybean oil. Nove beans have been hovering just below that $10 level, with the support now at last week's low at 968 1/4. Wheat's downside leader here overnight, however, still an inside day on the charts. At a BRICS summit here overnight, Russian President Putin again proposed a grain exchange for its bloc of countries that would allow for fairer price discovery while becoming a predictor of prices, while also playing an added role of global food security. We will see if that materializes. So thank you for listening, everyone, and I hope you have a wonderful day.